Hey guys, can you guys hear me? Let me know if you can hear me. Great. I'm going to start in a couple of minutes. Okay. Just wait a few minutes so that people can join, and then I'll start. Till that, I can make the announcements, etc. as well. Yeah. So watching from UK. Greetings, man. I believe this series actually, this is going to be quite life changing for many of you because uh I actually simplify everything a lot, so you don't have to like learn like 10,000 concepts, 10,000 PT arrays and all that shit. So I'll just keep it very simple and how basically how I got profitable. So the thing is that I got profitable when I actually simplified things for me. When I used to learn 10,000 things, that's when I would lose. But as soon as I started simplifying things, like I stopped learning the stupid PD arrays and all that shit. That's when like I saw a drastic change in my trading. How long have you been trading? So I've been trading from like 2 years actually, a little more than 2 years now. I'll wait like 1 more minute and then I'll actually begin the teachings also. Uh, these streams are going to be like I might do it like either 3 or 4 of them, and I'll cover every single thing in these 3 to 4 streams. So um, it's not gonna be a one stream. It's going to be a series. I'll start from the very beginner step, like not the very beginner step, like what is shorts or what is longs, but like with ICT concepts. I'll start with like the very beginner stuff, but I won't dig too deep in those things because they are easily available on the YouTube in any other video. So I'll rather focus on the things that are not actually available to everyone. I avoided the new ICT videos. Yes, I haven't watched anything after the 2022 mentorship. It's useless. Okay, 30 seconds more, and then I'll officially begin. These are going to be recorded as well, so you can check them out. And make sure to join the Discord if you have any questions or something. You can ask me here in the chat as well, but if you remember something, if you get any question later on, you can just do it in the Discord server. And the Discord server, I'll pin it in the chat, so so it's easy for everyone to see. All right, so let's begin actually. Okay, so with ICT concepts, most of you might know, it's all about liquidity. So if I have to, uh, if I have to define what liquidity is, it's basically just stop losses, levels where there are stop losses. So traders, they put stop losses, right? So the job of the market is to actually attack those stop losses. Now you might have this question of where those stop losses are. So they are above all highs, are below all lows. Okay, so then there are some different kind of highs and lows as well, which we'll get into detail. But this is just a beginner stuff. All right, so I hope you guys can see the presentation. Um, you can read these things out, but I actually pretty much told to explained it to you. And all the market does is that it takes liquidity from one side and then targets liquidity on the other side. So basically, if markets wants to go higher, it's gonna first take out some lows, purge all those stop losses, and then go higher from there. Okay, that's how the market actually works. And if it wants to go lower, it's gonna take out some highs, purge liquidity above those highs, or take liquidity above those highs, and then go to low prices. Um, where does liquidity rest? So it rests as all highs and all lows, because trader puts their stop losses at all highs and lows, and the market just takes those, manipulate, and then go to the other side. So I have examples here. So if you look into this chart here, this is, and also the concepts that I'm going to teach you will work on every time frame. So this is the monthly chart here, and we can see crypto chart here, and this is a high, it's taken out. You see, this is the manipulation. So stop losses here are taken out. So people who were short already, they are already taken out before the market expands lower. Then here at the very bottom, we see some consolidation and a low formed, and market manipulates below this low and then expands higher. Then we have another low here. Market takes this out, manipulates, and then move higher. So you see how before moving lower, it takes out a high, and before moving higher, it takes out a low. Okay, so that's how it's gonna work basically. Here's another example on the low time frame, and it's again Bitcoin, but these things work on every market. Okay, you can check gold, you can check Nasdaq, and all that stuff. It's gonna work. Okay, so here we have price going higher, but if you look into it closely, you will see that before moving higher, price takes out some lows before moving higher. These manipulation, this actually helps the market to accelerate higher. Okay, and again, manipulation below low, manipulation below low, and here is another one as well, manipulation below a low and then expansion higher. Okay, here's another example. So we see a high being taken out before price moves lower. It does it here as well, again here, and then here and here as well. Okay, so kind of these things kind of happens on every time frame, and this is for our chart Euro USD. This works everywhere, you can check it out. Also, you can get these PDF files as well. I'll share it with you guys too. Now let me know if you have any questions regarding this. If you don't, then I'll start with the next module. I'll wait like a minute and then I'll start. Mm, seems like there aren't any questions. All right, let's go to let's go a bit further here, and we have uh, PD arrays here. So PD arrays basically mean premium and discount arrays. Mm, okay, there is a question. What happens if market doesn't takes high or low and then go other side? Okay, so that's these are things. So basically, you want to look into it like this. When I teach you a concept, it's gonna work like, let's say, 8 out of 10 times. It might work 7 out of 10 times. So There are gonna be exceptions like price won't take out high before moving lower and that kind of shit. So it happens, you just have to ignore them. Or in the in the modules coming, it will be discussed as well, and different kind of market conditions as well. It's just part of market conditions, so I'll actually go through it. But uh, you just have to understand that these things aren't gonna work like every single time. Okay, so it might work 8 out of 10 times, it might work 7 out of 10 times, but not like 10 out of 10 times. I'll definitely do that. Like, I also plan to do like live trading streams, but once like maybe next month possibly, I might start doing that. So you will understand how I look into the markets, how I get my bias and all that stuff. Even though you'll get a pretty good idea of everything in these streams as well. Well, so I'm not gonna talk about all the 72 PD arrays that ICT have, and they are pretty much useless. I'm just gonna talk about breakers, auto block, and FVGs, and especially FVGs because these are the ones that I use, and I don't understand the logic behind breakers and auto blocks and why they work. I just honestly don't know. But I understand the logic behind FVGs, and that's why I'm able to trade it so well. But yeah, I'm not going to teach every single thing. It's just going to be what you need to get profitable. Okay. It's not going to be everything about ICT. It's going to be what you need to get profitable and what I actually use. So I'll start with auto blocks. So auto blocks is basically a bullish auto block. Basically, is the last are series of down close candles before an impulsive move up. A bearish auto block is the series of up close candles before an impulsive move down. So if you look into this, before every move up, we are gonna see some down movement before price goes up, right? In those down moments before the moments up, we are gonna see some bearish candles. Okay, those bearish candles are basically your auto blocks. Now, if they are consecutive traders, you are going to use all of them as one single auto block. If it's one, you are going to just use that one as your auto block according to ICT. And the same thing goes for a bearish auto block as well. So I'm not going to go in detail over it. Then we have breaker block. So breaker block is basically a failed auto block. So for example, this is a trend, it's moving lower. This is a retracement, and here we see up close candles before price moves down. It does there. Now we are going to expect some sort of rejection from these from this auto block here, or from this up close candle, a series of up close candle. But when price violates them and doesn't respect them, it turns into an auto block, sorry, a breaker block, and we would expect this bearish auto block to now give support to price. Basically, a support turned into a resistance, or resistance turned into a support kind of thing. So, yeah, just don't need to stress too much about it. Then we have fair value gaps. Okay, these are like pretty important for me. I can't say it for everyone, but for me they're really important. uh, a fair value gap is basically a three candle pattern, and the gap between the first wick and the third candle is basically a fair value gap. So this is a fair value gap, this is a fair value gap because the wicks of the first candle and the last candle has a gap in it, and then we see it here as well. We expect a bullish or a fair value gap to give support to price, and a bearish fair value gap to give rejection to price. So basically, this is going to act as a support, and this is going to act as a resistance. Now, if you guys already know these things, I'm sorry, but I just have to go through it because there might be people that don't know. I will go to the advanced stuff. Okay, I will go to every single thing. Trust me, you're gonna understand everything you need to get profitable or make your model. So hang with me here. Okay, so here are examples. So this is an up close candle before a move down. So an auto block, it's not that strong up an auto block, but yeah, it's still an up close candle before a move lower. And then we have these series of up close candles. So this is going to become our big auto block here. And you see how price rejects from here. Then we have a fair value gap here as well. And you see how price rejects from there as well. This is also a fair value gap here as well. And then there is a breaker block. And you see how price actually violates it. And in some cases, it might not even come back for it. Okay, it might not, but here price moves lower, then it does this little retracement into the breaker block and then moves lower. Now, this is something that you can pause the video here and check it out, but I'm just going to continue to not waste any time. Well, so here it is. This is a breaker block here. You see it here. Price is expected to get support from here, but it fails and then it closes lower and breaches this. So now this becomes our breaker block, a bearish breaker block. And here we see a fair value gap rejecting price, then here we see an auto block rejecting price, then again we see a fair value gap, and then you can look into all of these and you will see basically the same thing everywhere. Now, one thing that you should keep in mind is that not every fair value gap, not every breaker block, and not every auto block is going to work. Okay, you just have to align it with the other things like low time frame confirmation and stuff, and that's how you can get a model. If you are going to buy from every bullish fair value gap or buy from every bullish auto block, you are just going to lose. That's how it's going to work. Here is another example, and a fair value gap, auto block, fair value gap, and a breaker block. So you see it happens a lot, quite frequent. And here it is again. You can check this out, and it's basically the same thing. I'm not gonna stress too much on these things, because they are pretty surface level stuff. So I'll quickly go over them. It's over for the PD arrays. Let me know if you have any questions. I'll drink water and come back in a few seconds. All right. So I think there aren't any questions because, as I said, these are pretty surface level, but I just had to go through them. How it's a breaker? So it is a breaker because this is down close candles, right? Series of down close candles, and we would expect price to actually show support from here. We want price to get support from these down close candles because this is an auto block if you are looking into it here, for example. But it fails to do so, right? It fails to do so, and now it's a breaker block. It didn't take, it doesn't always have to, okay? There can be an SMT here as well, but it actually doesn't have to do this every single time, okay? Price sometimes would leave highs here so that it can come back into it after its retracement is over. For example, if price is bullish, it will leave some sort of consolidations there above. So you kind of have to realize that it's not always going to be so clean that price is going to take out high and then moves over. Okay, that's how market maker models are formed as well. So you remember a market maker model starts with a consolidation. So if there aren't any consolidations, then how can a market maker form a model formed? Well, now I'm gonna go into the time aspect of the market, and this is kind of now we are actually transitioning into the advanced stuff a little. Like I won't say that's advanced, but still. Okay, so let me just open that presentation. Okay, so we have sessions, and sessions are basically some times in a day where market tends to expands more than usual. So for example, if you look into your USD, you will see that price mostly expands after 2 a.m. Eastern time, and after like 7 a.m. Eastern time. Before that, before 2 a.m. Eastern time, we usually see consolidation. So uh, this is where like sessions comes in. Okay. um so ICT kill zones are basically, I just talked about it. I don't think there I need to go over it again. Okay. So here are the different sessions. So these are like the four sessions for forex markets, and these are like the four sessions for the index markets, are the indices markets, Nasdaq, etc. So we have Asian session, and all these times are in Eastern time. So you want to make sure that your clock is set to Eastern time on the trading view. So Asia session starts at 8 p.m. and ends at the midnight. London session starts at 2 a.m. and ends at 5 p.m. Sorry, 5 a.m. And New York session starts at 7 a.m. and ends at 10 a.m. And London close session starts from 10 to 12. Okay, so it starts at 10 a.m. and ends at 12 p.m. For indices, the Asia, the London is the same, but the New York session timings are a bit different. So we see the start of the session at 8:30 a.m. and it ends at 12 a.m. 12 p.m. And then from 12 p.m. to 1 p.m. we have a lunch break, our lunch hour. According to ICT, at that time the market tends to consolidate as well. New York PM session, 1 p.m. to 4 p.m. So these are like the important times that you want to trade in. Now it has, now there are different timings for different markets as well, and they are pretty important. Like you want trade your USD in Asia session, you are gonna trade it in these three sessions, and you are not gonna trade, for example, Nasdaq in the Asian session as well, because they tend to be more they tend to expand more in the New York session and the New York PM session. Okay. Yeah, so here's the explanation of it. You want to trade the pairs at the sessions that are geographically relevant to that session. For example, Euro USD. So it is a pair of Europe and the US dollar. So that means that we will trade it in the London session and the New York session. US dollar is related to New York and the euro is related to Europe, right? So that's why London and New York session is what we are going to trade on Euro USD. You can use the same logic for every single pair. For example, USD JPY. Okay, so we have JPY. That means that it's going to be active in the Asia session as well, unlike Euro USD, right? Uh, Now here, this is the importance of time in ICT concepts, and I can't stress it enough. But time is really really important, especially in indices, not just indices in every market, but for example, if we take indices, for example, every single day at 9:30 a.m. EST, we see a run on liquidity in the US indices market. Another important time is the midnight opening time. So I'll actually, uh, I don't know what this, some people are so fucking disrespectful, man. Like, wait, let me just do something of this motherfucker. I'm sorry, but this guy keeps on coming in my streams and he teases and be disrespectful for some reason, whatever. All right, so we have these two important times, okay? For like indices, 9:30 a.m. is very important, and usually the midnight opening time is very important for almost every pair as well. I'll go into detail a bit later. So we have midnight opening time every day. After the midnight opening time, we are going to expect the market to go higher if we are expecting lower prices, and to go lower if we are expecting higher prices. So this is basically the manipulation. This wick right here, this is most likely going to be formed after the midnight opening time. So midnight opening price is here, price manipulates higher and then closes back down lower. And if it wants to go higher, it's gonna go lower first and then expand higher. Okay. Here are examples. So we see this is the midnight opening time. Look at the manipulation below and then expansion higher. We have it again here as well. Midnight opening time and then manipulation lower and then expansion higher. If you don't know what this thing is, this is basically a PO3 uh, indicator, which you can use as well. Just search it in TradingView. It's pretty helpful. Like, I don't usually use it in my trading, but for these kind of things like making posts, etc., they are kind of helpful. Here's a bearish example. We see midnight opening time, then here we see that manipulation, and then break lower. Sorry, I mean expansion lower and close here. So this is for it for the sessions. Now let me know if you have any questions regarding it as well. I'll wait a minute and then start. Midnight and daily candle. Yes, it's kind of different because the daily candle that we see on TradingView, it starts from I think 5 p.m. Okay, Eastern time. But according to ICT, we are likely to see a manipulation after the New York 12 a.m. Okay, so that's why, and I've seen it as well. Like it pretty much works pretty well as you can see here, and in the other examples as well. So you wanna make sure that you are marking out the New York 12 a.m. time. Okay, not the 5 p.m. usual time or the UTC 12 a.m. time. Okay, look at these examples. They're pretty clean, like midnight opening time, manipulation lower, and then expansion higher. And I'm gonna say it again. Okay, these things, these things are not gonna be like this every day. Okay, there are gonna be days in which it's just gonna keep on going lower without even, or it's just gonna keep on going higher without manipulating. So you actually have to keep this in mind, and you don't have to expect expansions from it every day. Okay, I mean clean schematics like this from it every day. Like it can be one directional without any manipulation as well. So just don't expect anything like that. The candle covers for the entire day. Yes, it does. So we are gonna see, what happens is that at 12 a.m. Okay, what happens is that price has an opening price. Then if it wants to go higher, for example, it's gonna move lower, make the low of the day, then expand higher, and then at the end of the day, it's gonna come back down and close inside the range. Okay, so this is how it works most of the time. This is a perfect example here. You see how price moves lower, expands higher, and then comes back down and closes inside the range. So this is how it's gonna be almost most of the time. Not every time, but most of the time. I'm actually stressing on this again and again because, uh, you know, people lose money in the market. They lose control over they lose control over themselves. They lose their emotional control because they expect something from the market. And when that doesn't happen, they just actually they get disappointed, and they start to over risk, or they start to take or revenge trades, etc. So you just don't want to see you just don't want to expect these things every day, and you have to expect the fact that this can go wrong as well. Like it's totally on the books. So yeah, I'm just stressing on it for this purpose basically. Yes, you need to understand bias, and I'm getting into bias now. And bias is going to be the last one for this stream because I don't want to flood you with knowledge in one stream. Also, it's kind of tiring for me as well. So I'll do it in series, and I think that's the best way because I don't want to flood you with knowledge in just a few, in a couple of hours. All right, so let's get into bias now. And I think this is the most important lesson, and this is what people don't understand. Most of the people, they just struggle with bias, okay? For some reason. Okay. So bias is basically where you think the market is heading. A bullish bias means you are expecting the market to run higher and vice versa. Bias is the most important thing in trading. The first thing to understand before getting into a trade is bias. Once you have a bias, then you look for other confirmations to get into a trade. So you just don't go into the charts looking for a pattern to appear and then enter. The first thing you want to do is to set a target for yourself, like expect where the market is going. If it's going higher, you only want to look for bullish patterns. If you expect it to go lower, you want to look for bearish patterns. And this is how it works. If you do it the other way around, you would have no clue about where the market is going, and you will end up reacting to the market in a negative way. Okay, so that's something that you don't want to do, and you have to make sure you get bias before anything. So bias can be of different times, and it depends on the kind of trader you are. It can be your 4-hour chart bias, it can be your monthly bias, it can be your daily bias, it can be your weekly bias, or it can be your 1 hour, 1 hourly bias. Okay, so it depends. For example, if you are using H4 for your bias and M15 for your entries, you want to wait for both of the time frames to align and have the same bias. So the thing is that you just have to pick a couple of time frames. Okay, you just want to pick a couple of time frames to trade. For example, it can be the daily H1, or it can be the weekly H4, or it can be the H4 and M15. Then what you want to do is that if, let's say, you pick H4 and M15 for some reason, you want to see a clear bias on the H4 chart. Okay, once you see that clear bias on the H4 chart, okay, then you want to go to the M15 chart, and you want to see the same thing there as well. So for example, if you're expecting higher prices, you want to see the M15 being bullish as well. Okay, if you if both are not synced, then you are not gonna enter. Okay, and if you are entering on the M15, you don't have to care about the weekly bias. Okay, you don't have to care about the monthly bias. All you need is the H4 chart and maybe the daily chart. That's literally enough. So and same goes for if you are trading the M1 chart. So even let's say if the daily chart wants to go higher, if the daily price is bullish, you can still get an M1 short setup there if you are aligned with the M15 auto flow, or if you are aligned with the M15 bias. So this is how you want to look at the mistake that a lot of people makes, is that they are going to go to the monthly chart, they are going to expect something there, and then right from the monthly chart, or they will mark out some monthly PD arrays, and right from there they're going to go to the M5 or the M15 and execute there, which is completely wrong. You don't want to do that. You want to make sure that the time frames you are choosing are close to each other. For example, H4 and M15, and M15 and M1, daily and H4. Okay, so that's how you want to do it. To get your bias, okay, I basically use ERL, IRL, auto flow, structure, and ranges. So these are like the four things that I use for my bias. Now, it can be different for you. You can look for other things as well if it works for you. But for me, this is how it works. Okay, so ERL, IRL cycle, auto flow, structure, and ranges. And I'm gonna go over all of these things. Okay, so uh, this is pretty much it for this stream, because I just don't want to flood you with a lot of knowledge in just one stream. In the next stream, I will cover what ERL, IRL cycles are, what is autoflow, what is structure, and what is ranges. So these are like very, very important, and these are the key to getting your bias. And you can make your bias very, very mechanical with this. Like, you don't have to understand different kind of advanced stuff, like the way ICT teaches it. Like, for example, the ICT has some new concept these days, the gray pool thing. I don't know whatever that is, but I don't know. You just don't want to do it that way. You just want to keep it simple, and that's what I'm going to do. So ERL cycle, this is going to be enough for most of you. Like, you won't even need these things if you understand this one perfectly. If you understand this one, then you will get an understanding of this one as well. And this is also something ranges. This is also very simple, and it is independent of all of these three things. So it alone is enough for you to get a bias into it as well. I have a video on that as well, but yeah, I'll definitely explain it again. Well, so this is pretty much it. You can ask me any questions if you have any, and if no, then I will end the stream. Also, make sure to join the Discord. I'll pin the link here, so the link is pinned. Check that out, and yeah, let me know if you have any questions. I don't mind any questions, to be honest. When next? Okay. Uh, my maybe let me check what date is today. Okay, it's Monday. My dad is. Uh, it's Monday, so probably on Friday or Thursday. I'll see. I want to keep like 3 to 4 days gap between it because I've got other stuff to take care of too. So I think Friday or Thursday, but I'll announce it in advance. If I get bored in the weekdays, okay, and if I have nothing to do, then I'll just probably do it quicker. But yeah, you should expect it on Thursday or Friday. How to trade? Yeah, it is gonna be covered. Okay, this right here, these two, okay, you don't I just don't know how to explain how important order flow and structure is. Order flow and structure can tell you where the market is going. It can tell you where to enter. I mean, structure can give you that, and structure can help you understand which highs or lows will not be taken, uh even during newses. Okay, news, sorry, I'm sorry for my English, I'm not native, so please, if I do make mistakes, kindly forgive me for that. Okay, so structure can tell you where the market will go and which highs and lows can be will be protected in news, so you can use that. But yeah, it's coming, so everything's coming. I'm enjoying a lot. This is great. Sure, man, it's gonna continue. I personally do not like to trade news, uh, because of my scalping nature. Like, I just want to get out of trades as quickly as possible. I don't want to hold it for like 10 hours. So uh I won't have that much experience with news trading, like entering right at news at like 5-10 minutes before news. I don't have that much experience with it, but I'll definitely explain it. And I have done it before, but yeah, I'm a scalper, so uh, I'm gonna be better at scalping. I'm gonna explain scalping better than anything. Good night. Yeah, so thank you to everyone for joining. And this right here, it is recorded. You can check it out. And yeah, see you in the next one. Make sure to join the Discord though.